Business valuations. If people weren't wrong so often, we wouldn't be so rich. Investors are often wrong about business valuations. Most of the time they think a company is worth far more than it will ever earn. But that doesn't help us. What helps us is when they do just the opposite. When they think that a business is worth far less than its long-term economics indicate and therefore misprice it on the downside. It's the mispricing on the downside that gives Charlie his buying opportunities. And that is something the investing herd manages to do in a big way about once every 8 to 10 years. If you want to look at where the market was grossly wrong in its valuations and Charlie and Warren took advantage of the situation, look at the major recessions and stock market crashes over the last FTVE years. There was the Kennedy stock market slide of 1962, which gave Warren his buying opportunity in Berkshire Hathaway. There was the 197,374 stock market crash, which gave Warren his buying opportunity in the Washington Post. When Federal Reserve Chairman Paul Volcker raised interest rates to 14% in 197,880, killing the stock market, Berkshire was busy buying General Foods, R.J. Reynolds, and the Times Mirror Company. The stock market crash in October 1987 gave Berkshire the opportunity to start buying Coke stock, which it continued buying well into 1988. The banking recession of 1990 gave Berkshire its opportunity to start buying Wells Fargo. In the late 1990s, the internet bubble caused stock prices to soar, but nobody wanted the old-school brick-and-mortar businesses. Berkshire bought Star Furniture, Dairy Queen, General Ray, and NetJets. When the internet bubble burst and 9/11s beat the stock market down in 2001, Berkshire bought its positions in H&R Block and Moody's Corporation. The subprime blow-up in 2009 and the ensuing stock market crash set the stage for Berkshire to acquire the preferred equity or debt of GE, Harley-Davidson, Bank of America, and Goldman Sachs. And in 2010, as the stock market started to recover, Berkshire acquired stock in Burlington Northern Railroad, whose share price had been beaten down in the 200,709 crash. Why were all the other investors wrong? They were short-sighted and panicked, whereas Charlie and Warren were playing the long-term game and knew exactly what they were looking for.